On your way. Hello, everybody. Welcome back to the RationalInvestor.co's. This is our weekend offering. We take maybe a little bit more relaxed approach. I just finished our big TRI team trading meeting. So we have some interesting ideas for you to ponder as the week is going to unfold here, a brand new week. Sure hope you guys have enjoyed. Obviously, you see on the screen here, we've got the Bitcoin stamp chart up here. Sure hope you guys have enjoyed the subtle volatility in this asset. I've traded a lot of markets. I've traded stocks, commodities, you name it. Gotta tell you, this sure is an interesting adventure, trading this Bitcoin and watching how the 20th century world tries to deal with this 21st century concept, and watching, the different players participate in the market in their own way. I think on balance, our community's been relatively well served. We have some great content from various members. We have one site member who happens to have a family member at a big brokerage house that makes a lot of these calls. And I think their contributions of late, I think, sort of, help us put sort of price action into perspective. The sad part about it, of course, is as we were sort of climbing higher and higher and higher there, the sad part about it was to try and get, the public to just cool their jets and understand. If anything, what I like to do is I don't really like to take any new positions until I've seen some sort of consolidation in price. And as we were marching higher and higher and higher, it's awfully tough to get the public just, cool your jets. Let's wait for price to consolidate a little bit before we make any grand conclusions. And gee whiz, guys, that's exactly what we're getting right now. And interestingly enough, off of this chart, I just simply asked what were some similar consolidation periods previously, and I got a funny feeling that we're probably on that same sort of path right now. This sort of idea that the entire cycle from beginning to end seems to take a couple months or about 8 weeks. And then the move from the peak to the trough seems to be about 4 weeks or so. That would basically paint a very symmetrical correction, which I think is healthy. So when I draw those same numbers, I notice that we're coming up with some sort of, target for the end of this consolidation. And gee whiz, what a coincidence. It turns out that we have some pretty big fundamental drivers coming up here that are also supposed to kick in right around this event window. When I draw some very simple trend lines, we have, if we play connect the dots off the peaks, we have this expanding trend line. And the funny thing is I do this on things like altcoins and stuff, and people are astounded when price actually hits these levels. But if we just do it off of that previous peak, you can see how important that level was going forward. So if we do accept bullishly, I don't see any reason why we can't go up and play with this trend line heading up here. Wouldn't surprise me at all. And then if we do a similar trend line off of these lows, what we get is this sort of expanding trend line situation where the range is getting wider and wider as time goes by. I often suggest to the public that when you see these megaphone type situations through here, just leave this alone. And you can see exactly why this, this move here has probably broken a lot of people's hearts. Hopefully, and actually we have a fair amount of people in the lounge here. Did you get the message from TRI, from good old Brian? Did you, hopefully, through these daily briefs and stuff, the message consistently was, this is not a good place to be a buyer of Bitcoins. And you had to let this kind of behavior develop. And if you don't, you're asking to have your head handed to you. And that's exactly what's happening here. The irony of all of this is the, oh, hey, I love to hear that, Nick. That's fucking music to my ears. Well, okay, and it's interesting. Wayne says, but I wasn't a seller either. Well, we often, maybe we should back up and take a look at this weekly price chart. Do you see how dangerous it is calling tops or bottoms in these kind of markets? I mean, look at just this week's range. And this is a really interesting tell, because if this market can close above this tail's low, that actually represents a recapturing of a really important level. And the irony of it all, Wayne, is I don't think Bitcoin is a sell here. And the people that did call tops and were like, fucking, hey, man, I'm selling, I'm getting out, they might just get embarrassed in a little bit here, just like what happened here. I think it's extremely dangerous to call tops here. I do like the idea, though. You can see, remember we were joking about this. This is why we like to have selling levels. Looking back in hindsight, what do you think? Was that just a sick sell level by the little old lady? Knocking off another double right up just underneath that 5,000 level? Damn. That's ridiculous, eh? So, and if anything, this is a commentary where you got to have those open orders working. And as the market's face ripping up here, you let the market rally into your open orders to be a seller. Once we start rolling over here, you're chasing the market down. And, anybody that's sold through any of this, they're just like, oh, fuck me right now. And the worst part about this is we don't know what this is going to end up looking like. I have a very firm feeling right now that actually there's a couple things I wanted to talk to you about on this chart. The first is this is, in my opinion, nothing more than the market, because keep in mind, this is an OKCoin forwards contract, and theoretically these guys are outside of China. And if you go to their website, they're basically business as usual. They haven't made any reference to shutting down. And what I noticed was through all of that panic and all the dump, do you see how all they did was this was the last new 3-month forward contract rollover. And all they did through this dump was just simply bring price right back down to that exact same level. So it was like all they did was engineer a move so that the hedgers could quite literally, they strapped on their hedges here, and then they could just go and roll them over into the new contract at exactly the same level. Isn't that a bit shocking when you see that? To me, because we just had an OKCoin forwards contract expiry, I don't know whether you're following this or not. It seems to me that this has become quite a popular product in the market. And, considering the fact that they aren't in China anymore, now their next contract expiry now is the end of December. And I thought this was really interesting when I was talking with somebody about this earlier today. I don't know how many of you have been in this crypto space, but gee whiz, these Chinese love to fuck around with us in the West right around Christmas. They absolutely love this. And you don't know how many times I have, I've been in this space now for 4 years. Every Christmas, it's the same damn thing. They're messing around with price. But if you understand what just happened in the 3-month contract, it should make perfect sense. And in our weekly meeting, we just simply made reference that, gee whiz, into next Christmas, do you think we're going to see this kind of dumpage into that forward rollover event? My hunch is yes. Now, if we understand what just happened here in OKCoin, then when we actually look at the short-term price action, look at this. I mean, first and foremost, all they did was back it up into a reload zone. What a shock. Violent, just V bottom right off the bottom. And keep in mind, this is the maximum risk that any 20x leverage trader on OKCoin can handle. Do you notice how anybody who was trading 20x through this bottom got completely fucked over? They, in essence, froze any quote-unquote traders out of participating through this. Does that make sense, guys? Again, I think this is very business as usual. So, we often say, remember we were talking about bearish targets, bearish bots, harmonic objectives, everything being hit, and that the professionals were taking profits and getting out of their shorts. And really what we have to do as traders is we have to just let the fluff, this is where the public's all freaking out and all hell's breaking loose and, China ban and all that kind of talk. But what we really have to do as traders is just let the market settle down. This was a really big downside target window. Does that make sense, guys? The pros are all cha-ching, ring the fucking register, woo, Lambos for everybody, right? The noobs are in here trying to catch a falling knife, but this is damn difficult. I would argue that the quote-unquote traders want to let this thing settle out. And do you notice how politely this little double bottom has come in here? I don't think that's an accident either. And if anything, what I'm seeing here, hopefully you guys can see this, was they backed the market up into, if anybody wanted to short, they backed it up into there. They broke the market, but I think, and this is what just my personal opinion, I think the market just simply ran out of sellers. Because keep in mind, if you're in China and you're supposed to sell, theoretically, you better have gotten your ass out of there, right? And if we actually go look over at the trading over in China, right, we see that this is the BTCC China, right? There's all that, this guy's falling. And now look at the trading here. It's just gone into Chop Central, right? This was the event. Now, what's interesting about this is notice this monster tail here, right? Yeah, I definitely wouldn't be suggesting to anybody that you be playing BTC China. Don't even touch this with a fucking 10-foot pole right now. But, just listen to the anecdotal evidence, guys, and maybe, people new to trading, you just don't know this yet. But when you see, this is what we call the market going parabolic. When you see it just absolutely fall out of bed, that's usually the end of a move, not the beginning. And sure enough, can you guys see that was the end of the move, and now this is being digested. Does that make sense? I don't know. Anybody see that? So what I kind of see here was, they dumped, and now this thing's sort of in, okay, what the fuck do we do now mode. You could argue, sort of like, the calm after the storm. Now, for whatever it's worth, I've never really bought into the whole China's the second largest world economy thesis. I've never bought into it. And I know it's very unpopular, right? I would actually argue that the strings that control China's economic fate are actually driven by these guys. And of course, this is very, very unpopular sentiment in mainland China. In fact, I used to tell a story about how when they built out Shanghai here and all of that, there was a Japanese W within W there. That's right, Nick. There's a reason why actually I'm talking about this. But let me finish my story first, okay? Just humor Uncle Brian. There's an interesting story when they were building out. Get on with it. Well, I remember, and then, Herb at the hardware store said, have you seen these nails, the corrugated heads? And that reminds me, I remember when I was working in a factory in 1932, and I remember I had these shoelaces that were so, and then, when I talk about shoelaces, that reminds me of my cousin Betty. No. Oh, he laughed. Oh, I hope he didn't get insulted by that. That's hilarious. All right. Where is he? Gee whiz. Oh, he came back. Whew. I thought maybe he rage quit TRI there. I've had enough of this son of a bitch. I'm out of here. That was good timing for you to drop out there, Nick. All right. Back to our story. And actually, you know what? To hell with it. I'm not even going to tell you the damn story. Let's get on with Nick's chart. So I think that Japan is actually really important here. And as Nick pointed out, I think something happened here fairly significant. You see the higher time frame reload zone, right? Not an accident. I think this is very well telegraphed. What do you think? Is that if we talk about two-bar patterns, is there a two-bar pattern that we ever see in the marketplace that sort of looks like this? No way, man. No, Nick ruined it for everybody. So the point here is, who can tell me what this two-bar pattern is? Thank you, Tom. Good. This is railroad tracks. You're not going to see a better example of railroad tracks in the marketplace. But this is also a trading range unto itself. The point here is, if we break through the top of this railroad tracks, these two-bar pattern, that actually becomes a huge buy signal. Isn't that incredible? You get a buy signal all the way up there? Yeah, actually you do. But, and this is why I wanted to point this out, was I think that the market basically gave the smart money the window, right? In that, not only on the dump into the higher time frame reload zone, do you see how politely they set this trade? And this is so Japanese too. This is perfect Japanese. They are the most polite, most courteous, most, this is business. Do you see how they politely set up this reload zone? And not only did they bring price back into the reload zone, can you see the beautiful double bottom right here? I mean, this is textbook stuff, guys. Everybody take a screenshot of this. If I ever want to buy something in the market and make money, look for this. So Midnight Rider, go and grab that chart and see if you can understand what's going on here, because I think this is a hugely powerful level. As well, too, right? We talk about institutional fingerprints. It's the bar that made the low plus the preceding bar. Can you see what happened here? Was all they did was they had the dead cat bounce. They brought it right back down into the original institutional fingerprint. And it literally was, all right, if you want to buy, get your buy on. Does that make sense, everybody? I mean, I want to learn something today, Brian. Show me something that I can use as a trader. Quit with your goddamn stories about, Shanghai and buildings, and teach me something that I can learn to make money from trading. There it is. Just as simple as that. Maybe here, I'll even put it in the lounge because it's so important. I mean, Jesus, when I saw this the other day, I just went, motherfucking sons of bitches. Did anybody use that information? I don't know. Am I just talking out my butt? Yeah. So, I don't necessarily think, ironically enough, that we actually should be taking our cues from China. And from what I understand, this totalitarian dictatorship, which we should have never trusted to begin with, is actually threatening to put the miners now in China out of business. And Jeremy was telling me all about the wonderfulness that's going on there. So what I think actually is going to happen here, remember this very orchestrated backing up into a buying window. This wasn't done by accident. This was done to fuck these people, right? All the chumps that went and bought up top here when they should have no business buying up here. All right. This is basically, and keep in mind, Japanese, they're serious about this stuff, right? This is warfare to them. So really what I see going on here, totally business as usual. Now, in the short term, we can even see even right now, let's keep a close eye on if they need to back price up into this reload zone, right? We might even get a reload zone within a reload zone within a reload zone right in an institutional window. Maybe like the Asian kill zone tonight. Let's keep an eye out for that. My hunch, though, when I look at this, especially with this floor trying to be put in here, if we fail here, I think the test of this low is going to be pretty hard. And, you know, I thought it was interesting, you know, I just mentioned it very briefly there a moment ago. I'm still thinking descending wedge, which to me actually says that these lows are a bit vulnerable down in here. And as I had said a moment ago, China is now starting to talk about actually outlying miners as well. So I think this was the FUD about the exchanges being shut down. Dead cat bounce into resistance. My hunch is that the next FUD is going to be about the miners being kicked out of business there. Yeah, and they literally want to just they just want to close the world off from China, don't they? So and there's talk about them manipulating the blockchain itself and stuff like that. If anybody has an actual link to you know, with that an article, some sort of summary of that, I'd love that. If you could share that with the community, I'd appreciate it. So, you know, guys, I don't think it's ready. It's time for us to declare victory on Bitcoin just yet. Right. And if anything, just like the top here, we should probably get some sort of WE type action to really tell us that the bottom is in. And I just don't know whether we're quite ready there yet or not. I do think, though, that this was a pretty important level for the higher time frame players. There was a lot of, you know, I've talked to you guys repeatedly about how institutions can't chase bull markets, right? And if we think about the Kvark setup, it waits for the market structure, it waits for the blast off, and then it wants to sneak in on the 78.6. Well, there are going to be a lot of people that are not going to chase this bull, right? They're going to watch today's, you know, the daily brief, and Brian's like, please, for God's sakes, don't buy up here. Please don't buy up here. They're going to say, well, Brian, if I was going to buy, where should I buy? Well, okay, well, you say W's are bullish, so I'll place my order at the old W. And all those people, ding, 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 they just got filled. Does that make sense, guys? Do you see what happened mechanically here in the market? That's exactly what I think happened. There were a lot of buy orders, and if I'm not mistaken, our buddy Payman's cousin was also looking for this level. There were a lot of people in the marketplace that were looking for this level, right? Payman? Roman? Who did I say? Sorry. Did I say the wrong person, cousin? You're all cousins, right? We're all cousins, right, brother? Hey, brother, give me a high five, brother. All right, now I'm being stupid. You know, dead cat bounce, bit of a consolidation here. As we said, in Japan, we might even railroad track. I got a funny feeling there's still a bit more business. You know, just like we were talking about, you know, on whenever we're hunting tops, we probably should look for the candle body lows here to be played again. That really wouldn't surprise me one bit. So let's keep an eye out, you know, heading into the FUD event. Actually, we've got a couple FUD events coming up here. Here is the October 1st deadline for things like BTC China. If I'm not mistaken, there's, you know, like OKCoin, Huobi, all them, they are going to shut down through the month of October. So I think this is going to be messy. We also have EVU coming up. And if you guys aren't familiar with EVUs, hey, Jeremy, you're here. Have you got that EVU image just handy? Because I don't have it just handy off the top of my head. But I'm a big fan of the EVUs, GANs, planetary angles. And we have a Earth, Venus, Uranus 120 degree angular setup coming up here on the 23rd of September. How this plays into Bitcoin, I'm not quite sure. In our weekly meeting, we were looking at things like the stock market. And did I put that window away? Looks like oh no, here it is. And also things like the euro. Here is this the EVU chart? Yeah, there it is. So here's Venus, here's Uranus, here's Earth. It's interesting, we're outside of the sun, and we've got Saturn backstopping, but Jupiter's over here. So bit of a mixed message, but I got a funny feeling Saturn's backstopping this relationship, which technically should mean that it's a bear pivot. So we'll see what happens. Only time will tell. But I find it really interesting that on this EVU event, we also have, the euro basically setting itself up perfectly for a trade here. The US dollar itself is setting up for a trade here. I'm really thinking long here. And lastly, and probably the most important, is the stock market itself. Looks like it's setting up here. There is the EVU event window. And does anybody know what's coming up here middle of this week? Jeremy, you're not allowed to answer. James, you're not allowed to answer. Xmas, what? Come on. All you traders. Traders got to trade. Traders got to trade. Trader. No traders here? Come on. There's something pretty damn big coming up here. All right. Mike's heading in a good direction. Does the Fed ever have any regular meetings? FOMC. Thank you, Mike. So that's coming up on Wednesday. Who can tell me? And let's just see if we know. What's our rule about Fed announcements? Well, what is it? Yeah, don't trust the first hour following the Fed announcement. And of course, we often get FU moves around the currency markets right around these events. ECB, Fed, totally. So given what I'm seeing out of the euro right now and the US dollar, I totally feel an FU coming in here. They're trying to screw a small retail fish. But, I mean, the reason why I asked, is there anything significant about this FOMC meeting? Did anybody see some recent tweets that I put out? Is there something maybe in the wind that we should be cognizant about? There is a sentiment shift in the wind blowing. It's coming. Did anybody read that tweet that I put out about the Bank of Canada and how they're actually telegraphing to the world that maybe the Fed and all these central bankers are going to start changing their tone? And gee whiz, man, this is really educational for you guys. If you don't know this, you really should write this stuff down. Is there anything that's on the table here that could potentially affect things like cryptocurrencies? Is there any policies that's been in place for quite a while that maybe is being debated about changing? Short answer, yes. The Fed has been aggressively, and you could argue through the European Central Bank, the Japanese Central Bank, even things like, Canada and Australia. The general tone of monetary policy has been throw bags of money at the market, and we got to keep this market up. We got to keep it up. We got to keep it up. But I'm hearing that the tone is that they might actually be changing that policy. I don't know whether this is decreasing inflation or whatever. What I actually think might be going on here is we might actually go through a period of these central bankers deciding to unwind this quantitative easing. That's the kind of thing that might mark our long-term sentiment shifts. Do you think it's an accident that the Fed started this easy money policy after the dot-com blow up? Any level oneers here that just did your strategic planning modules? Do you see any correlation here? You should. I don't think it's an accident. We're coming to the end of this 17.5-year fear cycle, and all of a sudden, mysteriously, these Fed governors are starting to talk about, maybe we don't have to be so easy anymore. Any level oneers, especially recent graduates of level one? Nils, does this speak to you? Well, what's we got in here? Keith, I think you just did the level one. Gabby, Casey, I hope you can start playing connect the dots about long-term economic cycles and the way the Fed thinks. It's no accident. So, put it all together. And I think, of course, we have to be extra careful around these Fed announcement dates. If they do start, and what they'll do is in things like Fed minutes, they'll start changing the words that they use to sort of telegraph to the market. But we have to start actually thinking about, okay, the Fed's probably going to engineer the next recession. We know recessions happen in 8s, 9s, 0s, 1s, and 2s. We know a recession's coming. So the question ultimately is, how is it going to play out? It was interesting in the 1930s. I was reading some interesting historical reports, comparisons. In the 1930s, the United States of America got a huge injection of gold that was fleeing from Nazi Germany. And to a certain degree, that gold actually acted as that cycle's quantitative easing, because the gold came into the system. It was just sitting there, and it was actually collateralized, and people could actually lend money out based on these gold reserves. You could argue that's basically the same thing as quantitative easing. But the economy ran into a brick wall. There was a recession in 37 and 38, and they blamed that recession, and one could argue that that was sort of the ammunition that Hitler needed to actually justify the war. One could argue that recession started, je ne sais pas. Well, probably a lot of that gold flew to the United States. That was people in Poland and, all of the countries that Germany sort of overran that were scared shitless. They just needed to get their money out of Europe as fast and as possible. So a lot of that gold ended up in the United States. In fact, a lot of the people that emigrated to the United States did so just as a sort of reaction from the extremists of Nazi Germany. So if you need to, please take some time, do a little bit of historical research to understand what I'm talking about here. But the long and short of it here is that the U.S. government made a policy in 1936 to start restricting that gold lending, and that the taking away of that collateral engineered the recession of 37, 38, which basically sank the whole world economy back into sort of depression state. So where am I going with all this? There is a big debate going on in the sort of Fed and the higher ups and all that as to how quickly they should start pulling back this QE. There are some people in the Fed that are like, you know what, this is way too fast, and you're going to engineer the next recession. And of course, in all of our education programs, we all know that the Fed actually is the one that causes recessions, right? Anybody remember what's our number one predictor of recessions? See if anybody can remember this. Number one predictor. Yay, the yield curve. So, at any given point in time, now that you're all students of the market and you all know how to make informed decisions in the marketplace, we all have a heads up as to when the next recession's coming. And keep in mind, usually in recessions, stock markets lose about 50% of their value. So, do we have to worry about recession today? Nope, it's not here today. But we do have to be cognizant. If we start seeing the long end of the curve crapping out here, and we start seeing the short end, the Fed cranking rates up, we could have problems. But it's not here yet. But let's call a spade a spade. You can literally see this curve flattening out over time. If we go back into crisis times, can you see how steep the curve is? Ironically enough, by creating a curve like this, the Fed is basically saying, we're guaranteeing money. You guys are going to make all the money in your world. Just get back to work. Please, someone go back to work. But we're not in that type of environment anymore, are we? You can literally see the curve flattening out. So we can see that it's coming. No doubt about it, but it's not here just yet. It will be interesting to see how the Fed spins this quantitative easing and how that affects this end of the curve. If we start hearing that the Fed is they're quantitatively uneasing, is that the expression we should use? I don't know. Which literally means that they're going to be net sellers of all the bonds that they were previously buyers. Does it make sense? The bond market is going to crap out. And if the bond market craps out, then we'll know that, oh boy, there could be trouble. In a weird sort of way, though, the actual recession won't be generated by the bonds crapping out. It'll actually be the other way around. So what we really should do as smart technicians is let's keep a close eye on the long end of the curve. If the long end of the curve here rolls over, then I think the economy keeps going. If the long end of the curve rallies up and we break to new highs, then you know recession's on its way. So, kind of an interesting side, something for you to think about with regard to the bond market. And I know all of you guys love bonds, don't you? Okay, where do we want to go now? Hopefully I've given you just sort of an overview of what to think about here over the coming week. We've given you some pivots to think about in the coming week. Sort of talked a little bit about what I'm sort of expecting out of Bitcoin. Ironically enough, I'm actually, as this continues, I'm still thinking up here. And as I had sort of said recently, in my daily offerings and stuff, if and when we can rally up into this area here, I may seriously start thinking about letting the market have a few more Bitcoins. I don't really have a problem with that. I did not want to get sucked into the panic dump. I really didn't want to do that, and I don't think it's a good idea. Anybody should. If anything, what we need to do when you go through these kind of experiences is wait for the first stop target. And if you want to, even follow 50% rules. And at those levels, that's when you start asking yourself, do I really want to be in this story anymore? If anything, what I think is happening here, and you can see how that's basically a perfect 38.2 tag. I'm actually looking for a serious test of these lows, and I'd actually like to see the market take out this low, but the RSI not make a new low. If I saw that develop, then I'd be like, okay, yeah, we got a pretty good shot at taking a run up top here. As long as we just sort of work our way up here, again, here is reload zone up top here. We get up into this area, and then I have to start making some serious decisions about how much Bitcoin I am long and whether I would like to lighten up a little bit. So just a heads up, I know somebody was asking, oh, weren't you thinking about lightening up a bit? And the answer is yeah. If we get up into this area again, that's probably where I'm going to be thinking about lightening up. It's interesting. We've had a bit of demand on the site because Julian's done some great work with his RSI tool. We've actually had quite a few people ask him to try and put that presentation together. And I would argue everybody should bug Julian. I suppose I could put one together. I just have to find some time to do it. But as you can clearly see here, RSI trend lines are very good little tools, right? You can see the break of the trend line here. What I would actually argue, and this is so freaking cool, is if we go down to the lower time frame, the 4 hours, everybody see this cute little W here in RSI right down there? Let me see that. I mean, this is the shit. I've just found year after year after year, if you can find M's and W's, tight ones like this in the RSI, with it either in the overbought or oversold zone, oh my goodness. And what's also really cool about this is you notice that this all developed on a divergence too, eh? There to there, and there to there. So, you know, kind of what I was showing you off the dailies. This is what I'd like to see the dailies do. As soon as I see this, then we can start looking for this kind of shit. Now, you know, just looking at this relative strength index, what I see here, and, you know, just looking at this simple chart, if we look at levels, everybody should be able to eyeball where the reload short zone is. Yeah, man. You know, the irony of it all, Payman, though, is that after you do this for a while, you're just sort of like, yeah, it's just business as usual. And if anything, you know what I think happened here was the market really just went too far down. And then what happened here was this is what they call a short squeeze. So they, at this point here, the market's run out of sellers. There really isn't anybody else selling. And it's just a question of how far can they push the market to squeeze all the people that were short. And sometimes you get this in essence just one-way market where anybody is short here, and obviously this is a horrible, horrible short location. But anybody is short here, they're just dying 1,000 deaths. And the market is just trying to figure out, okay, where's their uncle point? Does that make sense, Payman? This is actually very normal. It's just business as usual. And remember what we said earlier? Wasn't this like 38.2, like right there? So as good technicians, we should just be simply saying, well, we can't really make any conclusion about whether this really is a bear until 38.2 is resolved. And that's exactly what I think has happened here. What's really interesting is if you do a fib going the other direction, notice where we are here. So, you know, charts that I was putting out earlier, I was just basically saying, you know, all we're doing is we're just stuck in 38.2 ping pong hell right now. You see that? Just boing, boing, boing. And quite literally, you can judge the direction of this market based on who wins this battle. Is this an AB equals CD? If the bulls prevail here, can't tell where that low is. I think it's there. And we're going up into this reload zone. What a shock. Right? And there's Brian's level that was saying if we get up into this area, this is where I was thinking about letting them have some. And does anybody notice there's actually a little tell here on this chart? I don't know whether you can see it, but the market itself actually said, oh, you know what? We're coming back here later on. Check this out. We can go and hello, Mr. Gappy Gap. Sitting right there. You see that? And we can draw a little line because gaps like to be filled in. Where should this market have actually a candle body fill in? That's right there. Well, can you ever say always in this game, Payman? What do you think? Can you say, you know, I always love it when people say that will never happen. And we used to always, as a broker, I'd always say, oh, never say never. Because you never know, right? This may be the one time, 1 in 1,000 times where it doesn't happen, or it does happen. And we have to build trading plans around that expectation that nothing is guaranteed in this world. That's just a brutal reality of life, guys. So statistically, what is the statistical odds of the market working its way up and filling in this gap? I would say statistically, there's probably a good 70 to 80% chance. And because it's that big of a statistic, it's something that we definitely should pay attention to. I would say statistically, and actually this is just a good conversation for everybody. What would a trader call this price action from this high down to this low and the trading within this? What do we call this? Oh, Nils, nailed it. All right, this is a trading range. So, and if you don't know this, probably good to write it down. Statistically, what are the odds that we're actually going to explore this entire range and just simply trade back and forth between the extreme ends of the range? It's pretty damn high. It's like, 70 to 80% of the time. So do you see, and I can't remember who asked the question, but do you see how statistically we're starting to build up a pretty darn good case for the market to just simply explore up into this area? Not saying it's going to happen, not guaranteeing, but statistically the odds are pretty darn high. And that's what we do as traders, is we're professional statisticians. That's our life, right? Well, I'll tell you what, if somebody does want their money back, Jeremy, I'll just send them off to you, okay? You can hear their case, and Jeremy's such a sweetheart, he might just say, you know what, that's such a sweet case. Here's $5,000. Have fun. There you go, Jamie. Jamie. There you go, Jeremy. I just opened the floodgate. All hell's gonna break loose. Aren't I a sweetheart? Thanks, man. Annually, geez, Wayne. With interest, right? Wayne wants interest paid on top of that. Oh, $5,000 of Satoshis. Okay, well, there you go. Okay, so I think we talked. What do you think? Have we talked Bitcoin into the ground here? Does everybody understand my outlook for Bitcoin right now? Boiling. What the hell does that mean? Boiling. All right, Chris is writing in the lounge. Not quite sure I understand that, Chris. Okay. Somebody asked for the can you start again? Well, I could. Yeah. Well, why don't we? So there was this building that was built in Shanghai, Nick. Yeah. Why don't we talk 10, 15 minutes about the building in Shanghai? Well, the tether chart, I like using Stamp because for me, Stamp represents the least corrupted market. The problem I have with looking at the tether is I think that the tether is extremely manipulated. And it is almost designed to get the kids to FOMO either long or short. So I generally like to, in fact, actually what I really like to do, and I think all of you guys, if you have this functionality, I think it's a good idea. What I like to do is I just simply like to put them all across my screen. And just sort of keep an eye on what the sentiment is going around the world. If I'm going to do, price analysis, try to come up with levels that I'm thinking the market's queuing off of, I really like to use Stamp because, like I said, I believe it's the least corrupted out of all of these. Ironically enough, if I was going to sort of do a hierarchy of sort of confidence, I think Stamp, I think Finex, I think this Japanese Bitcoin market, solid stuff. Coinbase, I like to watch them. They have funny price action sometimes, though, so you have to be careful with using their data too cleanly. And then, of course, things like OKCoin. We definitely have to obviously look at this, and BTCC with a major grain of salt now. In fact, I might even just take OKCoin off of the books for BTCC. I like to watch the Tether, but actually what I really like to look for here is I want to see signs that they're fucking with the kids. That's really the way I like to look at Tether is do we see any signs that the kids in crypto are panicking either to the buy side or to the sell side? And then there's always that, right? Nick said, right? I would argue that this Tether is fairly heavily manipulated. It wouldn't surprise me at all. Yeah. I don't know whether I don't think it's really that good of an idea to use Tether as an analysis tool, to be honest with you. I try to go to sort of the least corrupted one as possible. Okay? If I really want to see what are the levels that the higher time frames are operating off of. Okay, so it's about 20 after 12. I do have to hit the road here fairly soon. We got a big day with Liam, as always. As I said, and ironically enough for Bitcoin, does it kind of make sense that maybe Bitcoin's going to go a bit quiet through this Fed meeting as well? Does it make sense that maybe even Bitcoin land, maybe when they got a lot of the fireworks and stuff out of the way ahead of this FOMC meeting, so it could just actually just go sideways for a little while we go through this Fed meeting? That wouldn't surprise me. So really, I would argue that let's keep an eye out for this Fed meeting through the week. If you want to trade setups, feel free. There's lots of setups to trade. I've told the boys, because of our problems with margin trading right now, I can't even consider taking this 20x. Look at that, right? I mean, right now I get blown out here on any kind of move here. So if I did want to participate on this, I'm going to have to wait for some sort of pullback against these lows and hunt some sort of candle formation. Ideally, of course, 3 higher lows, right? Supporting the bot, all that kind of stuff. But I can't just take this bot trade. This is off an hourly chart, and price is so volatile that I can't even take a setup. So if I do see price come back against these lows again and nice quietly put in some sort of turn, then you might hear about me strapping on some longs to try and play this move back up top. But trading-wise, for the time being, I'm not really going to be doing anything here right now. Price is just way too volatile for me to even consider anything. Kind of sucks, but, that's a trader's life. Okay, altcoins. Actually, let's take a quick boo at Ethereum. It was interesting in our meeting. We talked a little bit about how Ethereum's got a pretty big fundamental event coming up here. And I did notice it was kind of interesting. Our example of Hoag's 80% play, where they, in essence, brought the market back down to value high. They asked, do we want to be in value, right? And I would argue that if this event coming up, and if anybody has the link to this specific fundamental event coming up here, it's like a fork or something like that. They're supposed to be like bigger, better, and faster than SegWit. I don't know. If that doesn't work, then my hunch is we're going to accept into value, and Hoag's 80% play, we're probably going to have to head right back down to value low. If this fundamental event goes off well and the market accepts above value, then rock and roll. And it's just interesting how they brought it right down into a trade location window. That really shouldn't surprise us. So if you are an ETH trader, keep an eye on, the test of these candle bodies off of lower time frames. Let's start seeing some anecdotal evidence from our momentum indicators that indeed the turn is in. Right now, I think the jury's still out. Not really the very good trade location here if you did want to take a stab. So that's sort of my thoughts on Ethereum right now. And actually a really good coin that we were looking at here this morning, which was a really good sort of side story, was this core. And I did up, I don't know whether I tweeted it. I don't think I tweeted it. What's not a stock? Where are we here? BTC. There was one site member that was totally jazzed about this, and it was really interesting how this market transition from what I would consider a trending market state to a ranging market state. So trending market state, and as we said here, market establishes a range, top of the range, bottom of the range, trending market state. And once that sort of trend has exhausted itself, then we're back into range. And you can see where the reload zone of this range is. You can see these original breakout levels. You can see the long-term monthly horizontal support and resistance levels. What I also noticed too, which was really cool, was as the market was exploring this range, notice how the profile filled out like this square. And this is what I wanted to demonstrate to you guys, show you guys through this image. I'm just trying to square it up here. But in essence, can you see how the market came back down to value low? You see how it tagged into value low here? Reload zone, original highs, monthly support, and then it reversed and started heading back up to test the top end of the range. Had some gaps. We had some candle bodies that needed addressing, reload zones. You can see how the market worked its way up. But what I wanted you guys to really see here out of this image was the transition from a market going from ranging to trending to ranging to what does a market look like when it's in a range and it's getting ready to go back into trending. And we did this actually through the combination of both working with the profile. You guys have seen lots of profiles where the profile looks like Swiss cheese, right? It just looks like this. Right, and maybe there's a big thing, right? And we just go, holy crap, there's going to be a lot of back and forth here. But do you guys notice in this particular case, after we went through this back and forth, look how solid the profile looks here. Does that make sense? Like, I really want you guys to try and learn this, because this is the tell that the market has done the price exploration process. When the profile starts looking like a block and not like Swiss cheese anymore, right? And the fact that the market came down to value low and just said, no, I don't want to be down there. I want to be up here. And then as we're coming back up to the top of value, you can see it got knocked back down. So they brought it back down. And then we want to go and look at our momentum indicators, and this is what we call the Devo. Can everybody see the cute little W in OVV or in Willie here? And it might be harder to see the W in OVV here, but can you see how it went down, up, down, breakout, above its moving average? And we look at the volume bars and we can see higher highs and higher highs. Wow, there's money pouring into this thing. Can you see that? Can you see me now? Can you hear me now? I thought this was a really, really good illustration of using the profile to validate the price discovery process is done and using momentum signal to tell you this thing's ready to rock and roll. What do you think, guys? Is that the kind of stuff that you can add to your journal? Maybe I should start looking for this kind of action. Yeah, and Nils, you know, Waves right now is going through that process. And I'll throw it in the lounge too. Waves is going through that exact same process. It's going through this right now. So what we should really see if we pull up the Waves chart is we want to see this profile looking nice and thick. Let's see what it looks like. Survey says not bad. Now, can everybody see the difference between the two profiles? This doesn't quite look filled in, does it? It looks to me like we could still do a bit more business down in here, right? This is what I want you guys to be able to see the difference. I'm sorry, Nels, didn't mean to do this to you. But I want you to see the difference between the different types of profiles. All right. What do you think, guys? It's about an hour and a half or so. Did we have fun today? Did anybody learn anything? Anybody? Great. All right, good. I haven't really been buying anything too much here lately. A couple stories that I kind of wish I'd gotten in on. But I'm just sort of cooling my jets. I thought it was interesting, this XCP. Look at that. What do you think, guys? Is this the kind of name that we might be slightly interested in down here? Me like it what I see. Right? Sexy P. Thank you, I guess. All right. Yeah, hopefully everybody learned something today, right? We gave you hopefully a whole bunch of stuff to chew on. I guess in tomorrow's daily brief, I'll try and keep the rhetoric relatively light, and we'll take a real good look at everything that you guys want me to look at. Do have to head off shortly and service the boy. So I'll leave it at that for today. But any questions, you know, feel free to reach out to me. Hope you guys enjoyed the presentation. Go out and find me some W's so I can go and buy some altcoins with you. I see lots of opportunity. Just go out and find these things. They're sitting out there. And let's all go make a pile of money together. This stuff works, right? It's just a question of doing it. All right, so have yourselves a great day, everybody. All the best, and bye for now.